Respected audience, we would like to invite you to be seated at the respective seats as we will start the event in a few minutes. For audience who are participating online, please kindly turn on your camera feature and turn off your microphone. As for the additional information, this event is participated by undergraduate and postgraduate students of the Faculty of Economics and Business Universitas Diponegoro who are joining online and offline. Thank you. Good afternoon. We would like to express our sincere gratitude to the Excellency, Dean of the Faculty of Economics and Business Universitas Diponegoro, Professor Dr. Suharnomo MSI. Our today's seminar speaker from Gabelli School of Business Fordham University, Professor Michael Cheah. Also today's moderator, Mr. Imade Sukrishna MSI PhD. All the Certified Wealth Managers Association team, Vice Deans in the Faculty of Economics and Business Universitas Diponegoro, the Head of Department, the Head and Secretary of Study Program in the Faculty of Economics and Business Universitas Diponegoro, all lecturers and academicians of the Faculty of Economics and Business Universitas Diponegoro, respected audience, ladies and gentlemen. First of all, let's praise our God who has been giving us some blessings, happiness, health, and mercy, so we can all attend and participate in the general lecture on wealth management with the theme of investment opportunity during economic recovery on Saturday, the 21st of May 2022. This event is organized by Master of Management Program, Faculty of Economics and Business Universitas Diponegoro in collaboration with Certified Wealth Managers Association. As the first agenda of today's event, let's stand together to sing National Anthem Indonesia Raya. Excellencies, ladies and gentlemen, please stand up. Excellencies, ladies and gentlemen, you may now take your seat. Respected audience, it's our honor to have the Dean of the Faculty of Economics and Business Universitas Diponegoro to deliver a welcoming speech, and afterward we would like to request the Dean to officially open today's general lecture. His Excellency Professor Suharnomo, the time is yours.
Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera untuk kita semua. Distinguished speakers, Professor Michael Cheah from Fordham University. Thank you very much for coming in our university, and thank you for our discussion fruitful discussion before we entering this room. And I think so many opportunities we have cooperation between University of Diponegoro, Faculty of Economic and Business with Fordham University, New York. Not only for our undergraduate program, but also for our Master of Management. Thank you, Professor Michael Cheah. On behalf of our faculty, I would like to extend my warm welcome to all of you to the general lecture event held by Master of Management Program, Faculty of Economic and Business, Universitas Diponegoro, and Certified Wealth Management Association, CWMA. Terima kasih Mas Alvin and teams for coming in our campus. As we know, teman-teman, that we have two seminar event for this week. To this school, we have Professor James Walsh from International Monetary Fund, and coming here in this room too. And we are very honored and delighted to welcome to the speaker, Professor Michael Cheah from Gabelli School of Business, Fordham University, New York, USA, and Mas Alvin and friend from CWMA. Thank you, and also Bu Christine, the partner of Fordham University from our jiran Malaysia. Malaysia kita. We always fight each other for our badminton, Bu Christine. That's why also in football, yeah. It's very busy in our social media. Fight each other for nothing, because we are not a fight for gold, but only for perunggu, for bronze. How pity we are. We want to sincerely thank you for delivering speech of Professor Michael Cheah in the middle of your busy and tight schedule. Of course, yes, because this is the second event we have here during pandemic. We always make our event only online, but today at least we have some friends, some students here that still stay here in surrounding Tembalang city. Thank you very much for your coming. This event has an interesting topic on wealth management about investment opportunity during economic recovery. There are lecturers, staff, and students from undergraduate and postgraduate attending this offline and online. I think online is the big number that join with us in online. We are welcoming economic recovery all around the world, especially in Indonesia, after the COVID-19 pandemic, although continuing Russia-Ukraine war looks like decreasing many expectations. As such, I believe Professor Cheah speak unlock many insight on investment opportunities related to wealth management area. I would like to appreciate our beneficial cooperation with CWMA. As you know that we have so many classes with CWMA, especially in wealth management, in our Master of Management. Since with CWMA, it's widen our students' option for their future. I hope the collaboration will long-lasting and deliver bright future for both FEB Undip and CWMA, and offer opportunity for our students to go to Fordham University for the next. As with Gabelli School of Business, Fordham University, USA, I hope that our discussion prior to this seminar may open up many cooperation in the near future. We love to make a lot of networks and friends. Ladies and gentlemen, let me officially open this event, and I ensure that this event will be of benefit to everyone here. Thank you and have a great discussion. Assalamualaikum warahmatullahi wabarakatuh.
Thank you very much, Professor. Respected audience, thus the introduction And then there will be an introduction by the representative of Certified Managers Association that will be represented by the Vice President of Certified Wealth Managers Association. To Ms. Carolina, the time is yours.
Okay. Hi, everyone. Good morning. Good afternoon to all of us here in this room today. I would like to, first and foremost, before I begin the presentation of who and what is CWMA, I would like to convey my deepest gratitude to Pak Dekan dan juga tim University Diponegoro for letting us socialize who and what is CWMA, as well as for facilitating the general lecture by Professor Michael Cheah in about 20 minutes. Okay, so these are the agenda that I will be going through today. There are about 10 of them, so you might think there's like, oh my gosh, this girl is gonna talk a lot. But trust me, I'm not. So without further ado, let's get into it. So how many of you have heard the term wealth management here before? Without, the without the Magister of Management here in Undip. Anyone's heard of the term wealth management? Wealth manager? No? Okay, so this presentation is designed to actually help you guys understand a little bit more of who are wealth managers and what is wealth management exactly. So wealth management itself is basically an ecosystem where they interact, and it's supported by multiple branches. So here, the first, we have our association, CWMA, or Certified Wealth Managers Association, headquartered in Jakarta. What is a wealth management profession? It's called a wealth manager. So basically, we manage people's wealth. We manage people's money, and we don't just try to make them richer, but we also make sure that all of their wealth is protected, is invested, and is distributed properly throughout the course of their lifetime. What do CWMA provide, you ask? Of course, we have 4 professional designations. The highest is called Certified Wealth Manager, or CWM. The second is Qualified Wealth Manager. Third is Associate Wealth Manager. And the last one is Affiliate Wealth Manager. I will go a little bit into detail on the assessment in a bit. For the fourth, we have 7 modules from Wealth Management Module 01 to 07. I will also go into detail in a bit. I would like to discuss a little bit about our partner university and institutions. What kind of products are available in wealth management in Indonesia? What are the services as well as the players here in Indonesia? Because, if we've never really heard of it, we might not know just how big the potential is for us to pursue in wealth management. Okay, so what and who is CWMA? Certified Wealth Managers Association is basically a nonprofit organization that was built and designed to protect consumers' interests, as well as to support the wealth management industry in Indonesia through education, through research, through product development, as well as global networking opportunities, both domestically and internationally. We were founded all the way back in 2005, so it's been 17 years of our journey, and we have over 10,000 members in the association itself. And yes, they are mostly professionals, so bankers, insurance agents, anyone in the financial services industry, that's basically our members in the organization. Our vision is to be the most reliable organization in serving wealth management industry through educating and developing its members. So we put a heavy importance on education here because not a lot of people understand or even know the basics of wealth management. That's why CWMA establishes a lot of the partnerships with top local universities, such as, of course, FEB Undip, so that we can continuously educate and make sure that the next generation of not just wealth managers, but also students and, hopefully one day directors of multinational companies, of local banks, they understand what it really means to manage not just not just like your client's wealth, but also your own personal wealth. Our mission is to support the wealth management profession by setting the highest quality code of ethics as well as professional excellence. So if you actually have the title CWM or Certified Wealth Manager, we actually need to adhere to certain code of ethics that we cannot breach, or else then we're not really wealth managers, are we? We're just playing with people's money. So this is the current CWMA organizational setup. So we have our board of management here. Bapak Catur Budiharto CWM, the current Vice President Director of Bank BRI, is currently our chairman until 2022. 2021 was postponed due to the pandemic. We have 3 vice chairmen. We have Bapak Randi Anto CWM, Bapak Budi Satria CWM. Oh yes, yes, I heard as well. And also we have Bu Handayani as vice chairman. She's the director of Bank BRI. Our Secretary General is Ibu Desi Armadiani, CWM. And our Treasury is Bapak Tommy Zhu, CWM from Agrodana Futures. So as you can see here, even the Board of Management itself already filled with industry practitioners, with industry experts. So if I were to delve into the divisions of CWMA, you will see that there are a lot of experts, we have a lot of practitioners, we have a lot of directors of top multinational banks, top insurance agencies here in our organization. So it will give you a chance to not just like, oh, I know this Ibu, oh, I know this Bapak, director of this, director of that, but you can actually network and build a relationship with them that will, hopefully, in the future, benefit you as fresh graduates to find jobs, to find networking opportunities. So we have 8 divisions in CWMA. The first is the education department. Second is the organizational development and membership department. Our third division is the standard profession and code of ethics department. So this is where we have to take a vow, just like a doctor. But when you graduate, you have to take a vow. For medical practitioners, we as certified wealth managers, we have to take an oath as well. We have a strategic alliance department. This is where we network with our partner universities, potential corporate partners, university partners, to establish a working relationship with them when it comes to wealth management education. We have our communication department. We have our research and development department. Legal and advocacy, and our last and newest department is the Sharia, because we understand how important Sharia banking is in Indonesia. And these are our board of advisors. So they basically advise the organization. So here we have the former coordinating economics minister, Pak Darmin Nasution. We have Pak Mulyaman Haddad as the former chairman of OJK, Otoritas Jasa Keuangan, or the Financial Services Authority. We have Pak Darmadi, he's the deputy CEO of BTPN. And we have Pak Tony as the CEO of Torres Consulting, and Pak Henry Kunaifi, the President Commissioner of BCA Finance. And these are more board of advisors here. Bapak Michael Sayang Bati, CWM, was supposed to actually be here to deliver the presentation, but unfortunately he is unable to make it. So on behalf of Bapak Michael Sayang Bati and as well as CWMA, I would like to apologize. And as of 2021, CWMA has actually established an Eastern Indonesian region chapter. So we have a CWMA here in Jakarta or in Java, and we also have a CWMA Indonesia Timur. So all the board of management, they're all located in Sulawesi onwards, and our purpose of creating or establishing a chapter there is to actually tap into the market in Eastern Indonesia. As we all know, Java, or at least the island of Java, is very central to the economy, right? But let's not forget our friends in Eastern Indonesia, they're just as important. That's why we saw this opportunity and we decided to establish a chapter there, because there's so much potential that we can grasp from the Eastern Indonesia region. So this is the, So this is the board of management for the chairman, the vice chairman. So there's 1 chairman and 3 vice chairmen. All three of the vice chairmen are from Universitas Hasanuddin, so I believe it's related through the AFEB. There's the general secretary, and there's a treasurer and a deputy treasurer. There are 5 departments or divisions as well in the Eastern chapter. The first is the education department, organizational development and membership department, strategic alliance, and communication, as well as the code of ethics. So it's basically very similar to the Jakarta one. So, Carol, you've explained to me everything about CWMA, who's running it, who does what. What are the benefits for me? I'm a student. I don't see myself working in financial industry or even like in Jakarta. So there are so many benefits, because just to give you guys a little bit of background, I'm also a member of CWMA, and I graduated in 2017. So I've been with the organization for around 5 to 6 years, actively trying to promote it, actively learning more from it. So of course, the first benefit, right, when you join CWMA, or if you want to go to the MM program here, and you get a CWM certification, of course then you will actually receive an internationally recognized professional designation. So it's not like a BSc or an MSc, but it's a CWM, and it's a professional designation that you can use in your kartu nama. Sorry, escaped me, kartu nama. In your kartu nama, and you can actually increase your value. Yeah, Baba, you're right. Increase your value, right? Because like, oh, here's a fresh grad. Here's a fresh graduate. But why does he or she already have a CWM? What is a CWM? And when you start explaining what a CWM is, of course, with the 3 pillars of wealth management, which I will go into detail a little later, potential employers are going to be very impressed, because that's what happened to me. I'm speaking here from my own personal experience, where I finished my master's degree back in the United States, and I came here and I took my CWM certification. People were very interested in what I had to say and what I had to teach to not just my team in the office, but also to, clients and, people outside of my circle. So that's the first benefit. The second benefit, potential internship opportunities. That's what we all want as fresh graduates, right? We want to get a job, or we want to intern at big banks, BRI, BCA, Mandiri, all the top banks, all the top institutions. With the CWM designation, we can actually help you get that internship program, because right now in the talks, we are trying to collaborate with a few of industry players to create a specific internship program that will fast-track all the fresh graduates to wealth management internship programs. So that's the second benefit. The third benefit, value, high selling point in the financial services industry. If a CWM is one of the professional designations that's available out there in the Indonesian market, there is chartered financial analyst. There's the certified wealth manager as well. So there are a lot of opportunities or a lot of options out there, right? But of course, with the CWM, not a lot of people know how to manage their wealth. Not a lot of people understand even the basic concepts of wealth management. So by having a knowledge that maybe only 5–10% of the population has, that definitely will boost your value in the job market. And then, of course, with that, it comes with a greater chance of getting a job, and of course, accelerated career development. CWM is also internationally recognized in, of course, other countries except for Indonesia. And even in Indonesia itself, we already have a standard competency or standardized level of competence in order for you to become a wealth manager. And through our courses, or even through our university partners, it's the curriculums and the modules are already standardized based on the government regulation. And of course, when you have a CWM and you start talking about finance, or whether it be personal finance or corporate finance, it will definitely impact your level of confidence, because not only do you possess such massive knowledge on wealth management and a lot of things that maybe the general population don't know, but you can actually also apply it to yourself. There's a saying here, and at least between my community of wealth managers, wealth management is a double-edged sword. The lessons that you learn in class or just within the industry is something that you can use to help businesses grow, but to also help yourself grow, your family. You can learn to manage your personal wealth, your private wealth yourself through learning more about wealth management. So, like I said, it's a double-edged sword. And I would like to actually add one more benefit that's been tremendous for me that's not listed here. It's actually the community for networking. I cannot stress this enough, how important networking is when it comes to, starting off of your career, right? You need to network in order to not just, build your contact list, but also to learn and to build connections with other people, with managers, with directors of, all these multinational companies. And by joining CWMA, or once you actually have the CWM certification, it's just 3 letters, CWM, but it opens up a whole new possibilities. I actually have a story. A friend of mine, a relative of mine, I would say, he finished his master's degree, and he came back, took the CWM program, and he actually got accepted to an internship in BRI New York branch. Do you guys know that BRI has a New York branch? He actually got the internship there just because of those 3 letters, CWM, and the massive connection that he built when he took the classes. Because a lot of these people who joined our program were all industry practitioners. So even if you work in banking, or for me, like let's say in consultancy, I get to meet people, let's say from banks, from insurance, from security houses, and even then, multiple levels. I'm not just gonna meet their manager, I'm not just gonna meet their directors, but I can meet their division heads, I can meet their managers, and there you learn like, oh, so this is how it works. This is how these professionals work. And for us, fresh graduates, undergrads, whether it be undergrads or postgraduate students, I think it's a very important skill for us to have. And CWMA definitely offers the space and also the amount of, and also the variety of the professionals that you can build a network with in the community. So I've spoken a lot about CWMA. Let's get into the wealth management part, the fun part. What is wealth management? No one raised up their hand when I asked if they've heard of wealth management before, but basically a wealth management is a comprehensive and a holistic system that is aimed at preserving, investing, as well as transitioning assets for families or for businesses. Jasa konsultasi yang terpadu dan komprehensif yang ditunjukkan untuk membantu nasabah individu dalam rangka melindungi, menjaga, meningkatkan, dan mentransfer serta mendistribusikan harta kekayaan masing-masing. Seperti itu. Oh, and in wealth management, there are 3 major pillars or 3 main pillars that drive wealth management. First is the wealth protection and preservation. The second pillar is the wealth growth and accumulation. The third pillar, wealth distribution and transition. For the first pillar, wealth protection and preservation. One can actually do it through insurance, hedge, trust, diversification, and residence by citizenship. Has anyone heard any of the terms on the slides before? Insurance, hedge, trust, diversification, and residence by citizenship. If not, then allow me to actually go to the next stage and explain a little bit. So, for insurance, what kind of concepts or what kind of products are we talking about, Carol, when you talk about wealth preservation? So basically, in order to protect your wealth, right? You've worked so hard on building your asset, you've worked so hard on paying off your mortgage, or anything that accumulates asset, you need to protect it. Why? If something happens, there's safeguards to protect your asset from devaluing or from losing your assets entirely. So you can do it through insurance. General insurance, health insurance, life insurance. I'm not going to go into detail regarding all the products. There's also, you can hedge. You can also hedge your assets. You can create trust. You can diversify your assets as well in order to protect your wealth, of course. And of course, the next one is residence and citizenship program by investment. This is something that's this is not something that's completely new, but it's definitely gaining more popularity. So basically, a residence by investment program is where you get permanent residency through investment, through purchasing properties in other countries. So say you would like to be a PR in Australia or an Aussie, then you can actually pay, I believe it's 1 million AUD, whether it be through investment in their companies, or you can actually purchase properties, and then you will get a permanent residency. For citizenship, you actually get a passport. So you become a legal citizen in that country, and you are eligible for their, to vote, for their healthcare, for their education system, such and such. Wealth growth and accumulation. I think this, I believe this specific slide will pique the interest of a lot of the students here, a lot of participants here, because it is definitely something that we've seen a number of quote-unquote terrible discussions going on, right, in the market with the, with the market, with crypto, with just the whole stock market in general. We've heard a lot of negative, not negative connotations, but more like negative experiences in terms of investing. Why do people have negative experiences when they invest? Most of the time, it's because maybe they don't really have the knowledge yet or the background as to how do you invest well, right? Us as wealth managers, it's also one of our primary job desk or our duty to make sure that our clients' investments stay, profitable, stays in the green, right? So how do you grow your wealth? Of course, through tax management, through investment management, through business venture, as well as money management. So tax management, like this. So for strategy, compliance, and audit, I think this is quite standard. And then for investment management, this is what I'm talking about. Investment principles, such as risk and return, time horizon, market timing, and concentration and diversification. These are very important concepts that maybe people don't understand or people are yet to know. That's why it's very important for us as wealth managers to continue to educate the masses on these concepts, to help, not only to help them, of course, invest better, but to make sure that they don't fall into traps, right? They don't fall into investment scams and such like that. So I'm not sure if everyone can see here, but there's a huge list of instruments that we can use to increase our wealth, right? So from all the financial assets, cash and cash equivalent, fixed income, equity, alternative investments, and then we have physical assets, we have derivatives, we have intangible assets, we have cryptocurrency. Like, oh my gosh, there is a lot of options here if you want to increase our wealth. But if we understand every single thing about the instrument without understanding the concepts of investment management, we're gonna see basically people lose their money all over again in maybe 5-6 months, But yeah, these are the list of instruments that we can use to increase our wealth. And also, we need to understand how to manage our portfolio, or portfolio management, through the process, through preferences. How do we construct portfolios? How do we monitor portfolios? How do we measure portfolios? All of these courses or all of these topics, we as wealth managers, we need to understand it. And then third, of course, is through business ventures. So, if you want to open franchises, create new startups, and such. And of course, money management through cash flow, debt management, capital budgeting, all the ratios are here as well. So very, very fun and interesting stuff that we learn here as wealth managers. Money management. Okay, and the last pillar is the wealth distribution and transition. So when you are older, or when our clients are older, what do we do with our money? How do we transfer it to our kids, to our grandchildren, to the younger generation? These are the way. We have through estate, we have through pension, and yeah, so we can do it through an estate, or we can do it through pension or retirement fund. So when you graduate, or once you're done with the Certified Wealth Manager course, what do you get? So this is a copy of the certificate that states the copyright for our CWM as well as QWM certification and our AWM and affiliate wealth managers. And this is the official certification, which you will receive once you've completed the course or once you've completed the classes, and you can actually use this as your professional designation in the real world, in the market. So what are the wealth management modules? You've seen a lot of instruments, you've seen a lot of concepts that maybe you yourself don't really understand yet, and this is where we try to teach out, not that we try, but we teach it to you so that you will be equipped when you face your clients. So of course our first module is going to be the fundamentals of wealth management, global phenomena, managing equity, risk tolerance, all these fundamental concepts. We have our investment and portfolio management modules as well. So these will go into bonds, stock, risk and return. A lot of calculation in this one, but it's not too bad, if I may say. Our third module is risk management and insurance. Fourth module is the legal aspect, the ethics, as well as the tax management. The fifth is managing pension and estate. The sixth one will be practices in wealth management, where you actually learn to manage a client's portfolio, case study, of course, not actual money. And then the seventh module is the international program, where we have this usually involves global speakers to share their experiences, in global management, investment suitability, and residence and citizenship by investment program. So what are the programs that we in CWMA have or offer, right? So it's offered through two methods. First is through our certification, whether it be public. So we have a public class that people from all access can join. We have an in-house class, so say specific to just a university or a specific bank, a specific institution. We have our global executive class that is designed for C-levels. So because this is a more strategic view on wealth management. And we also have our continuing professional development programs for our current CWM holders that they can partake and continuously update their knowledge. Or the second one is through university concentration, just like in Undip. So we have the undergraduate program, the graduate program, as well as we can work with the universities for a postgraduate program as well. Who are CWMA's partners, partner universities and institutions? So we have partners both internationally and domestically here in Indonesia. If we're talking about international partners, we have, of course, Fordham University. Professor Michael Cheah is going to be giving a general lecture. We have Fordham University. We have University of St. Gallen in Switzerland, University of Adelaide in Australia, Erasmus University in the Netherlands, University of Greenwich in United Kingdom, and we are in process of establishing a connection with Columbia as well. Our domestic partners are, of course, Undip, ITB, IPB, UNPAD. We have UGM, we have Unhas. So top Indonesian universities are also our partners, and we are very excited for the upcoming collaboration between Fordham and Undip, because I really do believe as a member, that this will bring forth exciting changes and exciting prospects, with students concentrating in wealth management and potentially having a degree there too. So what are the wealth management products? If you ask, like, what do we have in Indonesia over the list of, the big list of products? So we have the money market fund, of course. So we have the bank assurance products, unit link. We have term life, whole life, investment products, treasury products, and basic priority or wealth management services, and optional as well. Here, I'm not going to read every single one of it. And who are the players in Indonesia, Carol, when you talk about wealth management? Basically, anyone or any companies who target the high net worth individuals. So we have our private banks, we have our trusts, we have our security houses, technology companies, consultants, even yachts, private jets, luxury brands, Hermes, Chanel, all those are actually players in the wealth management industry as well. So I think I've taken up a good amount of time in explaining who is CWMA and what is wealth management. Hopefully, I've shed a light on a very interesting industry and a very interesting topic that you can take and can master, can learn in the course of your studies. So I believe there's one video that we would like to share. So thank you so much for your time, and enjoy the general lecture. Thank you.
Para wealth manager sangat diperlukan dalam upaya meningkatkan berbagai investasi dalam pengelolaan keuangan yang lebih produktif. Saya berharap Bapak Ibu bisa menjadi para wealth manager yang sangat berkualitas dan dicari oleh masyarakat luas.
Ini sangat penting, bukan saja bagi para dosen yang nanti akan mengajarkan ilmu atau pengetahuan ini kepada mahasiswanya. Pengetahuan tentang wealth management ini nanti bisa digunakan oleh para mahasiswa.
Kita sangat bahagia dengan hal ini karena ilmu yang kita terima sangat banyak. SBA akan merasakan manfaat yang luar biasa. Yang pertama karena ilmu kita meningkat. Yang kedua, network kita pasti akan meningkat. Makin banyak orang tertarik dengan presentasi wealth management yang ada di sekolah bisnis.
Kami atas nama pimpinan Fakultas Ekonomi dan Bisnis UNAS berterima kasih kepada CMA karena memberi kesempatan kepada kami dan kolegа dosen untuk menambah wawasan.
CWMA ini adalah salah satu partner strategis kami sekarang yang untuk peningkatan kompetensi baik itu di kalangan dosen maupun nanti perkembangannya untuk kepentingan kualitas mahasiswa kami ke depan.
Kami memilih program wealth management sebagai nilai tambah bagi mahasiswa dengan bekerja sama dengan CWMA.
Memberikan wawasan khususnya ada knowledge tentang bagaimana di negara lain wealth management.
Filmnya juga sangat mumpuni di bidangnya dan isi konten atau pembicaraannya pun sangat kontekstual dalam dan bisa diimplementasikan dalam pekerjaan.
Banyak speaker-speaker yang kompeten yang bisa memberikan kita tambahan informasi bukan hanya mengenai apa yang terjadi di dalam negeri, tetapi juga apa yang terjadi di luar sana.
CWMA telah menjadi mitra BCA sejak cukup lama. Saya yakin training yang begitu intensif yang diberikan oleh sebuah institusi yang kredibel dan committed untuk.
Bagi saya pribadi bahwa kedepannya tentu kami akan memberikan suatu layanan di bidang wealth management, bagaimana memberikan layanan yang terbaik buat industri wealth management ini.
sangat bermanfaat buat para eksekutif dan bisa menambah wawasan serta meningkatkan kompetensi para eksekutif.
Semoga CWMA semakin maju dan memberikan sertifikasi buat orang di jasa industri keuangan lebih banyak lagi sehingga kami dapat membangun networking yang lebih luas lagi.
Menurut hemat saya, ini adalah program yang bisa menjadi bagian dari membantu pemerintah meningkatkan literasi keuangan. Sehingga dengan pelajaran ini menjadi well literate, sangat paham tentang keuangan.
Saya kira ini penting sekali bagi sebuah tim. Kalau kita ingin membangun tim management, saya kira ini materi yang patut untuk diberikan atau dimiliki, dipelajari bagi tim yang akan membangun sebuah tim untuk ke depan. Kami merasa terbantu dan juga menambah pengetahuan kami, memberikan dasar yang sangat-sangat oke bagi saya.
Selain materi yang didapatkan, kita juga bisa ketemu praktisi-praktisi dari berbagai perusahaan di industri yang sama atau juga dari industri-industri yang berbeda, dan lewat itu kita dapat banyak wawasan baru ya.
Global Executive Program memberikan wawasan mulai dari wawasan global, regional sampai dengan lokal, sehingga sangat cocok bagi peserta yang ingin mendapatkan pengetahuan yang luas tentang wealth management.
Kita bisa terbuka, open mind, bisa mendapatkan ilmu yang cukup banyak lah ya, seperti itu, komprehensif kira-kira seperti itu.
Ilmu yang didapatkan dari pelatihan CWMA ini sangat bagus dan berguna sekali, menambah pengetahuan kami. Materi yang disampaikan sangat lengkap dan dibahas dengan detail.
Program CWMA secara keseluruhan sangat komprehensif dan pastinya sangat berguna untuk diterapkan di seluruh bidang bisnis.
I believe it's a great place for us to network with executives from different industries, from banking, insurance, and I'm also from fintech.
Thank you very much, respected audience. That was the introduction by the Vice President of Certified Wealth Managers Association. And now there will be a photo session. So we invite all audience to take picture together in front of the stage. And for all audience who are joining online, please kindly open your camera feature and our operator can capture all of us. Okay. We invite the Dean and also all audience. Thank you very much. You may cordially take your seat. Well, Excellencies, ladies and gentlemen, now we have come to the main part, which is the general lecture followed by question and answer session that will be moderated by Mr. Imade Sukresna, MSc, PhD. He is currently as the Vice Director of Master of Management Program, Universitas Diponegoro. He is a lecturer and researcher at the Faculty of Economics and Business Universitas Diponegoro, who successfully completed a doctorate of philosophy in the College of Business, Law and Governance, James Cook University, Australia. Without further ado, we invite Mr. Imade Sukresna, MSc, PhD, to guide this session.
All right, thank you very much, Risma. Assalamualaikum warahmatullahi wabarakatuh. Om Swastiastu, berkah dalam, namo buddhaya, salam sejahtera, dan salam sehat selalu. Good morning, now it's afternoon. Good afternoon, everyone. First of all, I would like to mention some parties here. First, Honorary Vice Rector for Academics Undip, Prof. Faisal, then the Dean, our Dean of Faculty of Economics and Business, Prof. Suharnomo, Vice Dean for Academics FEB Firmansyah, PhD, Vice Dean for Resources FEB Dr. Warsito Kawedar, and of course, Honorary Prof. Michael Cheah from Gabelli School of Business, Fordham University, and Miss Christina Zen, Honorary Dr. Michael Sayangbati, Head of CWMA, which is not present today, Miss Carol Christina and Mr. Alvin Joshua of CWMA, Head of Management Department, Faculty of Economic and Business, Dr. Harju Muharram, Director of Master of Management Program, FEB Mirwan Surya Perdana, PhD, whom now I represented as a Vice Director, Head of Undergraduate Program in Management, Dr. Mahfud, Vice Head of Undergraduate Program in Management, Dr. Ismi Darmastuti, Head of International Undergraduate Program, Ibu Cahyaning Ratri, Manager and staff of Faculty of Economic and Business, respected students, and all respected audience. We are happy now to have Professor Michael Cheah to deliver his lecture on investment opportunity during economic recovery and perhaps the connection with wealth management. All right, prior to delivering a speech, let me read some brief curriculum vitae of Professor Michael Cheah. He is a clinical associate professor in finance. He's a program director, Master of Science in Global Finance, and collaborative Master of Science in Global Finance. So, Fordham University is in New York, USA. Professor Cheah has more than 30 years of market experience. Up to now, he is the Executive Vice President of Capital Positions, one of the financial industry's premier positioning, growth strategy, and global marketing firms. Prior to that, he worked as the Senior Vice President and Senior Portfolio Manager, responsible for all investment grade fixed income portfolios at AIG Sun America Asset Management Corporation. He also spent 17 years at the Monetary Authority of Singapore, MAS, where he was the head of the US Bond Division, Markets and Investment Department, and Chief Representative of the New York office. His responsibility at MAS included managing foreign exchange reserve and overseeing external relationship with financial and government institutions in the USA. Professor Cheah also has taught global finance and macroeconomics at New York University, where he was senior advisor for the private sector concentration. He received his bachelor degree in business administration from the National University of Singapore and US, and Master of Science degree in Management from London Business School, where he was a Sloan Fellow and a MAS postgraduate scholarship recipient. He is also a chartered financial analyst and financial risk manager. Well, his research interests are in global financial market and macroeconomic policies. Okay, I took it from the website of Fordham. One thing that I missed, what is your hobby then? What is your hobby? Hobby in the meantime, what you like in the meantime? That's very important in the CV. What is your hobby then?
Well, my hobby is traveling and understanding the culture that I visit. And, just 24 hours in Semarang, I really love this place. And interacting with the people here, I become more and more curious about the history and culture. So my hobby is really to understand people and places.
All right, cool. That's why you like this one, Kapal Api. Kapal Api, and just recently we talked about batik and traditional cuisine, just like what Christine liked. Oh, that's lovely. All right, Professor Cheah, the time is yours, and then I'll give you 1 hour for speaking, plus followed by the questions and answer.
Okay.
Ali.
All right.
Time is yours, please.
I'm just going to go down there to talk.
No worries. Okay.
Just want to make sure that I'm standing at the right place. Okay, excellent. Well, good afternoon, senior leadership, dean, faculty member, student, CWMA, and of course my lovely wife, Christine. I'm very happy to be here, and the topic that I'm going to talk on is investment opportunity during economic recovery. But to share with the students some more important topics on as you graduate from here, as you move on to the industries, perhaps I can share with you my background and what it takes to survive in today's extremely competitive world, right? And if you look at my background, okay, so can I give this to somebody who can control this for me? Okay, all right, can you see this? All right, so as was mentioned, I had spent 17 years with the central bank, and when you start work, it's very important for you to concentrate on gathering skill set. It doesn't matter whether your job starts as an internal auditor or a bank supervisor or a professor. It's all about gathering skill set, right? Because the world is changing so fast, right? And we just have to keep on adapting. So in the central bank, I learned a lot of skill set as I move on. And then 17 years later, I joined the AIG to run their bond portfolio management. And so that all my learning in the central bank, understanding policies, comes in very useful. And in the process, as a fund manager, I need to interact with clients. And that's where I learn how to explain complicated concepts in simple terms, and also to help people with their financial literacy. And from that, after 14 years, I decided to reinvent myself, right? Because again, the world is changing so fast. Not only do we have to collect skill set, we also have to reinvent and transform ourselves to be able to capture new opportunities. So the demand was for people who can do consulting services, and that's where in my years as a portfolio manager, I developed the skills to simplify concept, understanding problems and be able to find solutions. And that's very useful as a consultant. Then from there, I moved on to New York University and became a professor. And after 2 years, I was headhunted by Fordham University that really appreciate my background. And as we have discussed in the meeting just now with your leadership, we hope to be able to deliver some of the assets that we have in the Fordham University. That is to provide students with both academic professors teaching as well as industrial experts with more than 20-25 years of experience. And in the world that we live in today, we are looking at the internet world, we're looking at the Zoom world, and it is not too difficult to convince some of my fellow professors that are teaching in Fordham to fly here or to teach using Zoom, right? So the key is to share our knowledge and share our asset, right, with your university here. So after this, I am made program director for 3 separate Master of Science programs. And because of my skill set, I'm also invited to teach at Peking University every year. And I teach the MBA program at the Nanyang Technological University. So to summarize on this, I hope that as a student you take away 3 things. First is collect skill set, right? Okay, and never be satisfied. You can always learn something new, right? Number 2 is, as Carol mentioned just now, the importance of networking. You might be the smartest person, but if nobody knows you, then what's the point, right? And when you network, you want to be aggressive or you want to be forthcoming, right? When you go for a conference, reach out to people and say, I'm a student from Undip, and please tell me about your job, and you make friends, right? And the third point is that as you combine your skill set and your networking to figure out what is in demand in the market, right? You learn to transform yourself to adapt or leverage your skill set, right, into new opportunities. So I've transformed myself 3 times. At the end of today's lecture, I'm going to show you how I'm transforming myself for the 4th time. Okay? All right. So with this as a background, if we can look at the very beginning, right, asset allocation. What kind of asset allocation they have done well in the past, right? And from the basic important asset allocation, how do we adapt to the new environment? So the new environment now is economic recovery and inflation. So if you begin with this simple cockroach portfolio, and this is 25%, 25, 25, 25, 25, stock, bonds, cash, and gold. Look at the performance, right? You have an average annualized return about 6%, and an incredible 14% here and 14% here. Most important, okay, for the purpose of wealth preservation, look at the 0 line. You don't see negative return, right? And when you don't see negative return, that means that every one of this, you're compounding your money. Okay, you're compounding your money, right? So what's so special about this cockroach approach? Why the quarter in each of these stock, bonds, cash, and gold? Why does it work? Well, that's because it has enough, right, to be able to capture the ongoing situation. Right? For example, when you have decreasing economic growth, right, and you have decreasing inflation, right, low growth, right, low inflation, stocks and bonds will do very well. Then here, when you have slow growth, right, and you have inflation, right, also decreasing, like government bonds and long-term corporate bonds will do well. And here, where you have strong economic growth, right, and low inflation, right, stocks and commodities will do well. Right now, a lot of portfolio is relying on this part here, because we are going into an environment where we have increasing economic growth and increasing inflation. Right? So we are getting more and more inflation, right? Yes, the Federal Reserve is raising interest rate, but I'm going to show you why we are going to see even more inflation. So the idea is that the cockroach approach can stay with 25, 25, 25, 25, but a good wealth manager would want to focus more asset in this quadrant, okay, right? Meaning that you want to have greater exposure in commodities and real estate. Whenever we see a price increase, right, a one-time price increase, that's not inflation. What the central bank worry about is a cycle of inflationary pressure. It's a cycle that they worry about. Because if you begin with workers expecting price increase, they engage in borrowing to buy in advance, they're hoarding. And when they hoard, they increase demand even more. Right? And when workers expect price to increase, then workers would demand pay increases. And especially in countries where labor power is emerging again. Right? And from the workers expecting price increase to workers demanding pay increase, the next step is companies willing to pay up. In many countries, there's a shortage of workers. Right? Part of it is because of demographic. Right? Part of it is because, right, we have young people who don't want to work for companies. A lot of young people want to become entrepreneurs. They are more in the internet platform business. So we have a shortage of workers, and companies have no choice but to pay up. Then finally, we have this company raising prices. And when company raising prices, workers expect price to increase, and this will continue. It is this cycle of inflation that we are seeing today that is most worrisome. And the Federal Reserve have no choice but to show that they are willing to do whatever it takes to bring down inflation. And that means that interest rate will continue to rise at the risk of slowing down the US economy. And if the US economy slows down, then it could slow down the global economy, right? While inflation continues to remain high. So the situation now is, like, how high is inflation? And where do we find the talent that can understand inflation? And where are the opportunities? Let me show you some charts to prove to you that the cycle is moving up. Right? The cycle is continuously moving up. Right? Here, right, wage growth for low skills, right, for the workers are rising. Right? Wages are rising. And in a lot of companies' discussion, right, when companies have the public annual general meeting, whatever the CEO and CIO, CFO says are all transcribed into a transcript. And this is now available in the internet. And with machine learning, right, they are able to extract the key words. So the key discussion recently have seen a spike up in terms of mentioning of rising, higher and rising wages. Right? So companies are very worried that they are facing rising wages. More important, right, companies are also seeing higher profit despite higher wages. So this means that they are willing to pay the workers what they want, and they have the power to raise prices, right? So therefore, it's not surprising to see in many countries, prices of goods are going up, or what we call shrinkflation, where companies are shrinking their packages, right? Because they cannot raise price, but they reduce the volume of things that they are giving to their customers for the same price. So the inflation phenomena, right, is what we are seeing now, right, is moving through this cycle. And this is very scary. This is inflation expectation, okay? So when we look at the survey among the consumer, we are looking at the consumer expecting, right, prices to go up sharply next year to 6%. So if they are expecting higher inflation, they will ask for more wages, right? So this is the cycle that I'm watching very carefully. Now, when it comes to inflation, right, it's very important for you as a student to know where to find data, right? Okay, and I know from my own experience, when I was a student, I was spoiled by my professor because the professor gave me the data. But when you work in the company, you have to find data yourself, right? So I would recommend to you, right, to be a good friend of FRED, okay, right? FRED stands for Federal Reserve Economic Database. Federal Reserve Economic Database. So all the important economic data that the Federal Reserve need to look at are in this website, okay? And when you go in there, you can easily download the data, you can easily create charts, all within 1 minute, right? And here, when we look at inflation, we're looking at the CPI, right? Consumer Price Index. If you look at where we are today, we see a sharp jump, and we have not seen this level since the 1980s and the 1970s. We have not seen this kind of inflation since the 1970s, 1980s. What does that mean? It means that a lot of people in the market today, whether they are portfolio managers or wealth managers, they have no experience. They have no experience in managing money at inflationary time. They don't know how, because they've never been through this period, right? The people who had traded currency, gold, stocks, back in the 70s, 80s, they're all retired, right? So this means that as students, if you were to spend more time learning about inflation, right, developing a good knowledge about inflation, how different assets behave, right, in the 70s and 80s, when you go for a job interview, you stand out, okay, because you are able to tell the potential employer that you know something more than other candidates, okay? And they will engage you. They engage you to want to learn more from you about what you know about inflation, right? That will raise your price, okay? So we look at CPI. In the same thread, right, you can look at core CPI, okay? Why core CPI? This is CPI without food and energy. Food and energy are very volatile, okay? So in order to remove the volatile component, we look at core CPI, right? However, while the CPI and core CPI are very common terms, it's important for you to know that the Federal Reserve focuses almost entirely on core PCE for their decision-making process. In other words, what you and I see as CPI inflation, the Federal Reserve look at core PCE. Why is core PCE a better indicator? Because the CPI is a very 1950, 1960 concept, where we don't have advanced computers easily available. So those inflation indicators uses a fixed weight basket, right, based on the average family purchases. And this is revised every 5 years. So the fixed weight assume X% of the household spending on chicken and X% on beef. But we know that in the real world, this is not realistic. Because if the price of chicken were to go up, right, then the household is likely to spend less on chicken and more on beef if the price of beef goes down. So the PC deflator is more accurate, right, by using the actual spending as weight, which is why the Federal Reserve look at the PCE number. And of course, when it is core, that means that they remove the food and energy, right? So, I went through this because I want you to understand, right? Data are very important, right? As students, as market practitioners, you need to understand where the data come from and what is inside the data, okay? When you look at this chart, right, the main point here is that when you are comparing, right, inflation in Indonesia with inflation in the US and with India, you are not comparing the same thing. Because the basket of goods and the component are very, very different, right? In India, 40% of the CPI is attributable to food. In the US, it's only about 8%. Does it mean that the people in India eat more food than the American? Well, remember that the CPI is based on the average household. In India, the per capita income is very low, and for low-income countries, they spend proportionally more money on food, right? So if you want to forecast, if you want to understand and forecast inflation in India, you focus on food prices because it is a very large part of CPI. In the US, right, you will see that 42% of the CPI is due to housing. Right? It's due to housing, okay? Right? So how do the government collect these housing price changes? Well, what they do is that in their sample, they would go to the household and say, do you rent this place? Yes, good. Now, how much are you paying for rent? And how much did you pay for rent last year? So that the year-on-year change in the rental, the number goes into this. If the person say, no, I'm not renting, I own this place, then we have something called owner's equivalent rent. They will say, if you were to rent, how much would it cost today compared to last year, right? So these are all very, very important ways to understand, right, economic data. Economic data help you to predict the economic trend, and economic trend help you to predict the central bank policy. And if you can predict central bank policy, you can do very well in the financial market. So I want to show you that this blue line is the median asking rent, and the black line is the CPI primary rent, okay? So this is the 42% that goes into the CPI. Notice that the CPI primary rent, right, move together with the median asking rent, okay, right? In other words, the sample number that get into CPI, the black line, follow the real world rent very closely, right? But what we see recently is that, right, the real world rent has gone up sharply, but the sample number that goes in CPI, okay, has, for sampling reason, has actually went down. So this tells me that this is going to reverse and follow this line, and we are going to see even higher inflation numbers, right? You can do very serious research, or you can use shortcut, okay? And I would recommend to all students that you spend your time reading Bloomberg.com, Wall Street Journal, Financial Times, right? When you read all this, you benefit from a lot of research that are done by other people. And here, this is an excellent research, right? Here it shows the dark blue annualized return for various assets during the 10 worst years of inflation. And what do we see that has the highest return? We have oil, returning about 30%, and then we have gold, silver, and real estate. Right? So this is the opportunity, okay? Right? Opportunity well, let me phrase this way. Let me put it this way. If you're going to be an investment professional, right, your mindset have to change, okay? Right? It is not about whether the world is getting better or the world is getting worse, okay? Right? It is about what direction are we heading, which asset class would perform the best, right? If we have a recession, then government bonds will perform the best. And now that we are moving into inflation, right, we can see that gold, oil, real estate will do very well. Okay? So you have to have a mindset to be able to say it's not good or bad, it is how can I capture the opportunities in the market. Right? So in terms of investment opportunity, my first point is to focus on gold. Right? I see increased demand for gold in the core asset allocation position. Because when you study asset allocation, it is common to have 60% equity, 40% bonds, or 40% equity, 60% bonds. And typically, they had done well in the past because right, when the stock market don't do well, money would fly into the government bond market. When it's doing very well, then money would fly out from the bond market into the stock market. So you have the seesaw effect. And with the seesaw effect, you're able to benefit from the diversification. However, under an inflationary time period, both stocks and bonds are expected to decline. There's no diversification, right? Under high inflation, bonds get killed. Prices come down. And when prices come down, interest rate goes up. Inflation also hurt the stock market because under inflationary times, companies have difficulty in predicting what is their next year's input cost. There's difficulty in predicting what price they should set. And they will make mistakes. Right? So when both stocks and bonds are going down, then the answer is to buy gold. Because when both stocks and bonds are falling, money have to go somewhere to seek safety. And gold is a good store of value. So this is the write-up that I just explained. And I like gold. I also like the gold mining stocks, right? Because as the price of gold goes up, the miners are able to sell at a higher price, right? And for many of them, their operational cost is rather fixed, right? So their all-in profit margin has been rising. What is interesting to me, in terms of gold and gold mining stock, is that when you look at the yellow line or the gold line, the gold prices per ounce, you see a typical pattern in the past, for the blue line, global exploration budget. As gold price goes up, there's more budget to explore for more gold. And this is, in the long term, not good for gold. Why? Because when you have exploration, somebody will find gold, and then they have new supply of gold into the market, and gold price would come down. Right? But this time, even though gold price has gone up, but the budget for exploration has not gone up. What does this mean? This means that even though we are seeing high gold prices, we are not seeing new supply. Right? Okay? So if we don't see new supply and we see more demand coming in, that means that the gold price will be pushed up higher over time. Right? And it takes a long time, right? If the companies were to say, all right, gold price is now very high, we need to go and dig and find more gold, it takes some time. It's not like, it's not like you and I can go outside and find a mountain and start digging and we find gold. Right? It takes time, okay? 1 to 2 years for prospecting and discovery of gold. And then 2 to 3 years for the development. It takes time to get permission. It takes time to find the right companies to dig, right, and to bring the gold up. And then it takes 2 to 3 years, right, for production. So we have a long lead time, okay, before we see any gold supply increasing. So I talk about how important it is to understand that gold would benefit when both stocks and bonds are declining. More important, right, what we have seen recently is that central banks around the world are getting very, very worried. Because way back in January 2020, right, you have this Economist article, right, discussing, right, America's aggressive use of sanctions endangers the dollar's regime. Right? And the story is that, right, the US Treasury Department has put a legal measure to prevent this Russian aluminum company from freely accessing the dollar-based system. Meaning that this company cannot use their account in JP Morgan Citibank. No matter how much money they have, they cannot use the money. What happened to this aluminum company? It would die, right? Okay? Especially when they owe a lot of money in US dollar and when they have to pay the customer in US dollar. And then, very soon after that, we have this news. US warned Iraq it risks losing access to key bank accounts if troops told to leave. Loss of access to the New York Fed account, right, risk creating cash crunch in the Iraqi financial system. What does that mean? Right? This means that Iraq, okay, has a risk of not able to use their US dollar account with the New York banks and Federal Reserve. And if Iraq have to pay for the import in US dollar, like most countries, how long can they last if they don't have US dollar to pay for import? Right? And recently, because of the Russian-Ukraine war, the US has stepped up, right, to severe, right, Russian access to dollar. Okay, so here's another country that has lost the access to US dollar. And the scary part is, as economists have discussed, could the West punish China the way it has punished Russia? Imagine China not able to access US dollar. Right? China import $1 trillion of commodities. They're very commodity driven. If they don't have US dollar to pay, right, it's a very serious situation. So as I'm talking to you now, right, I'm quite sure that the central banks around the world, including the Monetary Authority of Singapore, would be very worried that almost all their reserve is in US dollar. What if our finance minister or our home affairs ministers or the prime minister say something that upset the American? They have shown that they are capable of weaponizing the dollar. They have shown that they can turn the US dollar into a weapon to punish any country. If Singapore loses access to the US dollar account, we cannot survive more than 2 days. We have to do whatever the US tells us to do. So what should central bank like the MAS do? The answer is move a lot of US dollar into the euro, into the yen, and to gold. Right? So as central banks move their reserve, more into gold, right? They're not going to be doing this over a 1 month period. It has to be a 3 to 6 years plan, where every week or 2 weeks, they buy small amount of gold, small amount of gold, right? Low key, but the important point is to protect the country. So the demand for gold among central banks, right, need to increase sharply. And this chart shows you the third reason why I'm so bullish on gold and commodities as we face inflationary pressure, right? If you look at this chart, this is commodities divided by the stock market, S&P 500, right? You see that commodities have done well during the oil crisis, the Gulf crisis, and the financial crisis. And since then, right, commodities have underperformed. Why? Because in the last 10, 20 years, right, we have no inflation. When we have no inflation, of course, commodities underperform, right? But this also means that a lot of portfolio are underweighted commodities. If they're underweighted commodities and if they have to buy, right, that is going to bring it up, right? So in other words, commodities would outperform the stock market, right? And if you are a student of statistics, right, you would believe in reversal to the mean, right? When we are too far away from the average, we pull back, right? And now we are so far from the average, right, it is not difficult to pull back to the average. Right? The other reason why I'm so bullish on commodities, right, would be the dirty energy, right? Here I'm talking about crude oil, I'm talking about coal, right, natural gas and all this. Because we have been talking about sustainability for the last 10, 15, 20 years. Right? We had expected a big drop in the purchase of the coal, oil, and all this. But if you look at data, this is China's gas import. And this is since 2010, right? The demand for this has not gone down. It's accelerated. And if you look at the world coal consumption, right, this is the most dirty energy, but it is a cheap form of energy. Look at the demand. So all the talk about sustainability have not created a supply from the renewables. And we are relying a lot on the dirty energy, right? So the question then is, how come there's such a huge demand, and when will the high prices come down? Right? Well, prices is a function of demand and supply. Okay? Demand for energy, right, is accelerating. Why? Because, right, we had the 2 years of COVID, where we're all working from home, but now countries are all opening up. Right? We are doing more business traveling. Right? We are traveling for vacation, and we are trying to solve the supply chain problem. And economic activity globally has suddenly come together, and that pushes up demand for energy. And the trouble is, although demand has gone up, supply of energy is not coming, right, as fast as we need. And the main thing is that when you look at the cost of capital for the offshore oil, the cost of capital is about 20% compared to the cost of capital for the renewable energy. When the cost of capital is so high, right, this crude oil, these coal companies cannot afford to invest for the future. Demand may be high, but if they are going to say we are going to issue bonds at what, 20%, they cannot. It's not feasible. So there is no new supply. So in other words, the concern about renewables actually create upward pressure in the dirty energy prices. This is the inventory of crude oil, gasoline, right, middle distillate, and residual fuel oil. In the past, back in the year 2015, 2016, we have a lot of inventory. And even here, right, we have a lot of inventory. But now, we have negative inventory. What does that mean? That means that we are using up all our available inventory, and we have the speculators shorting the energy market. So we don't have enough inventory. And this means prices will continue to go up. Here, I'm just showing you that the capital expenditure by the major oil companies like ExxonMobil, Chevron, BP, right, Royal Dutch. You look at the investment collapse, right? Again, that's because they do not have access to capital. A lot of pension fund, university endowment fund, mutual fund don't want to invest in these dirty people. And therefore, they have no choice but to cut down their future supply, okay? And this is a problem for us. Number 6, right? We need to understand, right, why the adoption of green energy is so slow, right? So here you see, right, the primary use of fossil fuel, right, has been about 92–95%, and right now we are stabilizing around 85%. And the IEA, right, stated policy is to bring this use of energy down to about 73%. At 73%, this is a very large demand for fossil fuel. Right? We are not bringing it all the way down to 0. And this chart is rather shocking to many people, right? And this chart tells you that when the country, right, has more advanced, okay, more greater adoption of wind and solar, like Denmark and Germany, their residential electricity cost goes up significantly. This is a major contradiction, because as much as we like renewables, the more renewables we have, the more expensive electricity becomes. So you wonder why. But because renewable, in our mind, is we are using the sun, it's free. We are using the wind, it's free. The problem is when we have to create the solar panel, we have to create the windmill. Right? We need the minerals, we need the metals, we need the rare earth. So according to many calculations, right, the demand for renewables in terms of all these important metals and minerals far exceed the total available resources on planet Earth. The demand for renewables far exceed what we have. So this means that we do not have economy of scale. This means that we have this economy of scale. The bigger, the more successful the country, the more we demand for this kind of rare earth, the higher the price. Okay? And this is going to be, renewables goes up, and it will pull up the crude oil. Okay? The difficult thing to accept is that the renewables are not an efficient source of energy supply in terms of mathematics. Okay? I am a big believer in renewables. I'm a big believer in sustainability. But numbers are very important, right? So what does it say? For every 1 unit of energy invested in solar, we get back 2 units. It takes energy to produce energy. For every 1 unit of investment that we put into solar, we get back 2 units. For wind, we get 4. Biomass also 4. So the answer is the world has no choice but to continue to demand, to rely, meeting the demand from coal and eventually to nuclear. Yes, we have the Fukushima accident, but I believe that the world has learned a lot on safety, and nuclear could be another great investment opportunity. So climate activism is bullish because it requires all this kind of zinc, cobalt, silicon, molybdenum, magnesium, and so on, right? Then what about electric cars? Even worse, because electric cars require a lot of nickel, aluminum, right, phosphorus, iron, copper. In terms of nickel, the increase in demand in 2030 is expected to be 14 times what we had used in 2019. Right? So imagine 14 times increase in demand. What happened to the price of nickel, aluminum, phosphorus, iron, and so on? Prices will go up. Right? So these are the real world that we deal with. Okay? So therefore, when you monitor investment opportunity, it's about understanding the environment. Right? One way to think about this is that, right, I often tell my students when they do their stock pick, right, they pick the stock pick, and I will say that this stock pick that you have, would it do well under a recessionary period? Would it do well under an inflationary period? So stock pick is very situational. It depends on the environment that you're in. So investment opportunity today is about understanding inflation is real. It's going to stay with us for a few years. And what had worked previously, right, is likely to change. Okay? So that's the main part of my lecture. And usually at this point, when we have Q&A, students will ask me to recommend good books to read. Unfortunately, there's no good books because a lot of books, when they are published, they're either published too theoretically or too focused on certain part of the market. So what I've done is I have published my own book in Amazon for the currency market and equity valuation. Right? And it is priced for a student's level so that students can benefit from my work. And then as I promised you, I'm now transforming myself to the 4th stage, and that is the acceptance that students today don't want to read textbook. Even textbook like mine, they don't want to read. They rely on short video clip, and I have created a YouTube channel called the PJ Finance Show. And the title for this particular segment is Who Can Create Money? Right? Who can create dollar, version 2. And if I ask you who can create money, you will say central bank. Wrong. Okay? Who can create money? If you say central bank, wrong. Okay? Because the central bank, as you will see in the case of Japan, when you study the case study in Japan, the Bank of Japan have cut interest rate down to 0, and yet Japan did not grow. In Europe, they have cut interest rate to negative. And what happened to the European economy? It doesn't grow, right? So this explains that the central bank need other participants in order to create money. Then finally, this one is a continuation of the previous video, bubble versus no bubble, right? The question is, how come some of this money printing has turned into asset bubble? And how should people invest when you have an asset bubble, right? So, I'm doing this because, the world is changing. A lot of teaching would have to be done in the new medium, and that is either the YouTube or different platform, right? So it's available free for people. If you subscribe, you get the update as soon as it is published, okay? So with this, I thank you very much, and open up the floor for Q&A, right? Thank you. Any question?
Any questions from the audience here? A very good explanation of you, Professor Cheah, about the current situation. Well, we are waiting for questions from the audience here. If you have any questions, while waiting, we are waiting from the Zoom. Anybody in Zoom has questions? All right, if you do not have questions yet, may I ask questions? Professor Cheah? May I have your question? May I deliver questions? Can I ask questions? All right, now I understand why you are so interested in sustainability. All right, you have explained so many controversies in a common portfolio and also explaining the cost of the policy, vicious circle, and then plus current world situation. Now what I want to ask you is that how we deal with it. Is that only by focusing on sustainability? Yeah?
So the question is, how do we invest in sustainability? Surprisingly, there is a very serious lack of understanding about sustainability among the industry, as well as in some of the universities that I've visited. We talk about it, but the big problem is that there's no textbook. There's no textbook on sustainability, right? And in Fordham, we are looking into as early as 3 years from now to introduce our Master of Science in the impact investing, sustainability. But we are having a lot of difficulty, right, to find the right partner to understand and to put that into our curriculum, right? And we cannot find a PhD in sustainability because, you know, any student here today that want to study sustainability, right, you won't be getting a PhD until 5 to 7 years from today. In other words, if we are looking for a PhD today in sustainability, right, does this concept exist 5 to 7 years ago, and where does this student learn from, right? So we are partnering with industrial experts like the Peterson Group of Malaysia, right, in order to learn, right, in the real world what is happening. So there is a lot of learning about how different countries, like, define sustainability, how they look at different metrics when it comes to calculating, right, which company, right, meet the standard. So different countries have different standards. At the same time, for companies that believe in sustainability, right, they need help to be trained internally. Right? It's not just a CEO saying that, okay, we are going green, and we put stickers everywhere and say we are green. The operational people have to implement all these ideas into their process, into their project management. And that requires a lot of training, which I'm not seeing, and only a major company like Peterson Group is able to do something like this. And also, you need certification. Right? You need expert to go into the factory to certify that that company, right, meet the standard. And this is very important for a country like Indonesia, because Indonesia rely a lot on direct foreign investment. And it's important that these companies, right, get the right support to implement all these standards. Because if they don't, right, and if they were to pollute the place, then the younger voters would get very angry. And they will put pressure, right, to get these foreign companies out for polluting the country. But that become a very serious problem because, right, if you kick a company out, then there's going to be a serious loss of jobs. So therefore, it's important to be preemptive and set the stages now. And that's why in Fordham, we are putting in so much effort.
I think that's a good answer for that. Any questions? Pak Harjum or Pak Surya, we have two finance people here. They are the finance people, so they really know about these issues, I guess. All right, please.
Okay, thank you, Pak Kadek. Thank you, Prof. Cheah. It's surprising me that you say in this during this crisis, this gold is the #1 instrument for investment. You compare with the price of the gold and the cost of the mining. Yeah, the cost of mining is low, but the price is high, and this is the very prospective instrument investment. But in here, many people talk about the cryptocurrency as an instrument for the investment. Yeah. What's your opinion about this? Comparing cryptocurrency and gold as the investment instrument. Thank you, Prof.
Okay, thank you, Pak Harjum. What Pak Harjum said is that which one is the best right now? Cryptocurrency or what? The second one? Gold.
Gold. Yeah,
right now.
You explained that gold is #1 instrument.
Yeah, because you have explained the gold as a #1 instrument.
Okay. So I'm going to say this slowly so that I'm not misunderstood. Okay? Right? Cryptocurrency is a scam. Cryptocurrency is a scam. When I teach at Singapore Management University, I teach the student there how to become very rich. And I can share with you today. Step 1, you go to the Google and you type in, right, how to create a crypto. You can download the entire program. Okay? And you have to change the coin and call it the Made coin. Okay? Right? Step 1. Okay? Step 1, not difficult. You go to Google, you copy the program, and you rename it. Step 2 is very important. Step 2, you use the computer and to make 1 billion Made coin. Okay? Make 1 billion of this Made coin. Step 3 is very important. You must give away half of this 1 billion coin. You cannot be greedy. You must give away for free 500 million of this coin to the journalists, to the media, to the TikTok influencer. You must give away for free. Even though this is priced at 0.00, let's use 10 decimal, 0.001. Right. Step 4, right? You use your own money, 1,000 US, to buy your own Made coin. From 10 decimal, you buy so much, and to push it up to 5 decimal, 0.0001. And therefore, the price of this coin jumped up, okay, by 500 times. Then you do it again. You spend another $1,000 to push it up to 0.01. When you finish this step, all your TikTok friends and your news reporter the influencer would tell the whole world that this coin is the new thing. And that makes a lot of people FOMO, fear of missing out. They'll say, oh my God, I missed this big move. And then they'll say, can it move up more? Of course, the influencer will say, yes, it could move up more. And that go to 0.01. At 0.01, the last step, the second last step, is for you to sell the remaining of your 500 million coin. You must sell. You must get out. Okay? You sell it, you dump it, and then the last step is very important. If you're Singaporean, make sure you leave the country. Because this is market manipulation. In the stock market, this kind of move is a federal crime. But in the crypto market, it is not regulated, but soon it will be regulated. And people who create coins, who manipulate the market, will be in big trouble.
Okay, that's cool answer. Straight to the point. Okay, you know, I also raised that question. I want to raise that question because we, in the future, near future, we want to build digital business concentration. So it looks like related with cryptocurrency. And yesterday we held a webinar on blockchain technology. So cryptocurrency is not, when we want to build digital business concentration, is not always talking about cryptocurrency, right? How about the blockchain then? Is that different with cryptocurrency?
Well, I think we should be clear not to mix up the different concepts, right? Okay. Cryptocurrency is different from digital currency. Digital currency is different from blockchain. They're overlapping. In terms of digital currency, it is real. It is real. Because whether I'm in Singapore or in the United States, I'm already living in a digital US dollar world. Why? Because my bank accounts are all digital. I transfer money digital. So we are already living in the digital currency world. The question is whether the digital currency is made by the government or made by me, you, anybody outside that can make their own currency, right? So when I say cryptos, I'm referring more to those that are privately printed, okay, right? Now, within the digital currency or the privately printed cryptos, then you have the underlying technology called the blockchain, right? The blockchain is very useful, right? Okay? It's very useful because it provides the footprint, right? Footprint, especially for the supply chain and all this, right? But just because the blockchain is useful doesn't mean that the cryptos are useful. They are separate concepts.
Okay, thank you. Great answer. Now goes to Pak Surya from accounting department. I believe he has a very interesting questions. Please.
Okay, thank you. First of all, I'd like to appreciate, I'm impressed that you're wearing batik. I'm wearing batik now. And secondly, when you saw your data about sustainability, it seems like a paradox for me and a surprising fact for me. Seems that we are aiming for something renewable, but the fact is we spend more for something unrenewable. And also you mentioned about sustainability just now. So from academics' point of view, how are we working on sustainability as academics, particularly when we dealing with market data and the concept of sustainability itself? And my second question is our optimism after a pandemic. We are quite optimistic that the economy is going to rebound. However, you mentioned about cycle and a high inflation situation. So how long does the high inflation situation? Because when we invest in high inflation, we need a certain strategy, but how long does it take in your opinion? And when is the rebound? Because we are waiting for a base for making investment when this is a rebound in economy. Okay, thank you, Professor.
Yeah, the first question from Pak Surya is sustainability from the academic perspective, how we conduct it. Then.
From the academic side, they are still relying a lot on the renewables as a solution, right? However, I don't think they've taken into account of the total cost because of the diseconomy of scale, right? So that's why I'm a bit worried about relying too much on this, the academic approach, and which is why we are relying more on the practitioners. Because the practitioners, they are using live data, right? They're talking to real companies. They are reporting price increases of the rare earth and the nickel and all this, right?
The second question is on your prediction about, on what? Prediction on?
Inflation?
Yeah, because
rebound.
When will we got the rebound based on this current situation? When will it rebound? Because we have to make decision. You mentioned that inflation is still rising. When will it end? When will it end? So we can make a decision.
Make the decision on investment?
Yeah, because you mentioned inflation is still rising high.
Yeah.
When will it end?
Oh, when will inflation end? In the textbook, we learn that when inflation goes up, the central bank should raise interest rates, right? But the reality is that the inflation that the textbook talk about is the demand pull inflation. Demand pull inflation where growth is stronger than potential GDP, meaning that we don't have the available capacity or labor, then it makes sense for central bank to slow down the economy back to the potential GDP. However, this time around, we are facing not only demand pull inflation, we are facing a lot of cost push inflation, right? So cost push inflation comes from the labor market. We don't have enough young people who want to work in the regular environment, right? They are doing their own entrepreneurship, they are doing their own internet thing. So we don't have enough young people, number one. Number two, we have a supply chain problem, right? A supply chain problem, and China is still shutting down, right? Number three, we have OPEC refusing to increase supply. Number four, we have real estate prices going up. Why? Because a lot of investors are front-running the millennials. They know that the millennials would have to buy their own house, right? So when you look at this four cost push inflation, then the question is, can the Fed do anything to bring down this cost push inflation? By raising interest rate, will more young people go to work? Nothing to do with young people, right? They don't want to work, they don't want to work, right? They don't care whether the Fed funds rate is 3% or 13%. They don't care. It doesn't affect their desire to work or not. Number two, supply chain problem. Raising interest rate could make the supply chain problem worse. Why? Because the solution to supply chain problem is high prices in certain things. And that answer requires new investment to come up with new supply to solve this bottleneck. But if the Federal Reserve raises interest rate, it makes the economy more unstable. When it makes the economy more unstable, no business will start it because people will say, we wait. That makes the supply chain even worse. The Fed raising interest rate, how would Saudi Arabia behave? They will say, the Fed raising interest rate, US economy will slow down, we cut supply, right? Because Saudi is not going to increase supply when they see the Fed slowing down the economy. They will cut supply, and that would make the oil price go even higher. Then finally, the fourth one is rising rent. That's because now the millennials are in their late 20s, early 30s. They are leaving the home of their parents. They are looking at their own home. They're getting married. They need their own place. So they need to rent. As the Fed raises interest rate, mortgage rate will go up. When mortgage rate goes up, it's harder for them to buy. So what do? Demand for rent would go up even more. So that's why my scenario is for stagflation. Right? I see the Federal Reserve forced to raise interest rate very high, but unable to solve the cost push inflation. And we'll continue to see very high inflation. And my prediction is a lot of people will be shocked because a lot of people in the market today have not traded during an inflationary time period.
Thank you, Prof. Cheah. And is it answering your question, Pak Surya?
The first question is not, to be honest. Yeah, because we are rely on the textbook, but not textbook available for sustainability, and we get more approach in practitioner. So I think we need to do something as academics. You either go to the data and you know change the research paradigm to giving approach in terms of sustainability. And I just want you to share what is your concept in dealing with sustainability. If there is no available theory, but all we have is data.
Well, in Fordham, as we approach a new topic, of course, our priority is our own professors, and of course, there are PhDs and there are research people. And what we do is that we pair them up with industry experts. And we create a class where they co-teach. So the first part, right, would be more theoretical, based on whatever research paper that the professors read. The second part is taught by the industry practitioners. And when we pair them up, we hope that there's good chemistry, right, where the practitioners can adopt some of the academic theory into the classes. At the same time, our professors who are more research-based, they can use the updated what's happening in the real world, and they can also use the data that the industry practitioners have, right? So for us, pairing up is what we are experimenting now. We continue to look for a better way, right? Because at the end of the day, we are all trying to discover knowledge, and share that with our students.
Thank you, Professor.
You're welcome.
Yes, thank you for the answer, and we are looking forward for the progress for the pairing up between practitioner and academician. It looks like that there will be a new people wants to study about sustainability then. All right, considering there is no questions from Zoom, so I would like to end this questions and answer. So Professor Cheah has explained so well about the controversies in common portfolio and explaining the cause of the fallacy, including the vicious circle, plus the current world situation, and that answering so many questions about the hot topics right now about the cryptocurrency and as well as the sustainability. All right, thank you very much for the fruitful discussion and insightful comments from people, and also explanation from you all. Wonderful. All right, this is the end of the session, guys, and then let me returning back it to Master of Ceremony. Please, thank you. Oh, I forgot, we should applaud for our events right now. Thank you. All right, please, Bu Risma.
Respected audience, that was the general lecture on the wealth management with the theme of investment opportunity during economics recovery. Thank you very much for the enlightening speeches to Professor Michael Cheah from the Gabelli School of Business, Fordham University. Well, the next agenda will be the certificate and souvenirs handover from the Vice Director of Master of Management Program, Faculty of Economics and Business, Universitas Diponegoro, to our keynote speaker. Therefore, we invite Mr. Imade Sukresna, PhD, to give the souvenirs to Professor Michael Cheah on the prescribed place. Thank you very much. You may cordially take your seat. Well, Excellencies, ladies and gentlemen, we have had a productive and inspiring time together, and now we come to the end of the event. On behalf of the host and the committee, we do apologize for any mistakes in presenting this event. Thank you so much for the amazing enthusiasm and participation, and for all audience, you are allowed to leave the room and also Zoom meeting room. Once again, thank you and good afternoon.